In this segment, Daniel's going to be telling you about some of the mortgage options you have available to you. But there's a wide selection of those, so if you have any questions, don't hesitate to give him a call.
Frequently asked question that I receive and a conversation that I often have with home buyers is the different types of loan programs that are available out there, and that also kind of relates with what loan programs are not there anymore that used to be years ago, just due to the restructuring of the mortgage industry as a whole. The number one loan that's going to be done is just a standard conventional loan, and that's usually going to happen if you've got 5% down payment or more on that property. It is going to fluctuate directly with your credit score. That does not mean you have to have an excellent credit score to qualify for a conventional loan, but it does mean that someone with a top tier excellent score could very well and will most definitely see a better interest rate on their loan than someone who is barely qualifying for that type of loan. In this market, usually you're going to look at credit scores starting around 620 or 640, in that range for these conventional loans. Different type of structured loans could be government loans, and these could fit either those buyers looking for smaller down payments, or they could fit different needs for different properties. For example, FHA is a loan that is very widely used, a very strong loan. It's usually going to be for either first-time buyers or buyers who are simply looking to keep their cash at closing to a minimum, and that down payment is going to start at 3.5%. And an FHA loan, it gets a bad reputation from a lot of people who don't know how to handle it, but for a loan officer who is experienced and has seen and closed a lot of FHA loans, it is a very strong loan that has a lot of potentially benefiting aspects for their buyers. There are other loans as well. For example, in Kentucky, using Kentucky Housing Corporation, there's rural housing loans, and a couple of smaller loans that are very niche related items and will help people, for example, in outlying areas, finance a home, or people who qualify for special financing through those organizations.